Welcome to Turbulence and Takeoffs, the Play story.
Hi there. Yeah, today we're looking into what's happening with Play Airlines. There's been a lot of news lately, hasn't there?
Absolutely. And it's not just, abstract industry stuff. This situation, it really hits close to home for many of you listening.
Especially if you're working right there in Keflavik Airport, dealing with Play's flights day in, day out.
Exactly. We've been digging into the recent reports, the financial figures, trying to get our heads around what's really going on behind those headlines.
Yeah, and our mission here really is to break it down for you. Try to separate the facts from, well, all the rumors flying around.
Right. We want to give you a clear picture of where Play is actually heading. Think of this as maybe getting the inside track before the official memos come down, just helping you understand what it all means.
So we'll talk about Play's journey. So far, it's been a bit bumpy. Then the big news, this takeover offer.
And the huge strategy change they're planning. And crucially for you, what this might mean for how things work, on the ground at KF.
Okay, so where did it all start? Play launched back in, what, 2021?
That's right, 2021. And the idea seemed pretty clear then, ultra-low-cost carrier. Using KF as that connection point, that hub between North America and Europe, a bit like Icelandair's model, but, stripped down low-cost style.
Yeah, we've seen that playbook before here. But the thing is, looking at the analyses, the financial reality is, well, it's been tough.
Tough is putting it mildly.
That original hub-and-spoke plan, it just hasn't really worked out for them, financially speaking. They've been losing money pretty much since day one.
The numbers are pretty stark, aren't they, when you look at the cumulative net losses since they started? It's around, what, 171.4 million US dollars?
Yeah, something like that. It's a huge amount. And it wasn't getting better quickly either. Even the first quarter of this year, 2025, they reported another net loss, about 26.8 million USD.
Oof, that shows the struggle is ongoing.
And, the stock market sees that. Play stock price. Well, it tells a story. It's down massively, like 97% from its peak back in 2021.
97%. Wow. That shows just how skeptical investors became about that original strategy.
It's hard not to think about, well, the history here.
You mean WRW Air?
Exactly. The parallels are uncomfortable. Ball W Air had a very similar low-cost transatlantic hub model using KF.
And they also struggled financially and eventually, ceased operations.
Right. And what's kind of ironic, or maybe poignant, is that some of Play's key people actually came from WOW.
Yeah, they went into this hoping to do it differently, learn from the past, make it work this time.
But it seems like the fundamental challenges of making that specific model work from Iceland, especially low cost, are just incredibly difficult. It's a tough market.
Which brings us right up to the present day and the really big news. This proposed voluntary takeover offer for all the shares in Play.
Yes. And this is where it gets really interesting because it's not some external company coming in.
No, it's insiders, right?
Exactly. It's being led by two of Play's biggest shareholders, the CEO, Einar Örn Olafsson, and the vice chairman of the board, Elias Skúlason.
Through a special company they set up just for this, BBL 212 HFF.
And their thinking basically is that the airline needs a major shakeup.
And they feel they can do that better away from the public markets.
That seems to be the logic. Take it private, get rid of the constant pressure of quarterly results and stock price scrutiny.
So they can make the tough decisions needed for restructuring without worrying about the immediate market reaction.
Precisely. They believe a private, significantly restructured Play can succeed where the publicly traded version struggled.
Okay, and the offer itself, it's pretty low, reflecting that stock price drop, 1 Icelandic krona per share.
Yeah, 1 ISK. It's technically a premium over the absolute lowest price it traded at recently, but it definitely shows the current valuation.
And shareholders get a choice. Cash out or stick with the new private company.
That's the offer, yeah. Cash or shares in the new entity.
But it's not a sure thing yet. There's a condition attached.
A very important one. The whole deal depends on them securing more money, an extra 13 million US dollars in financing.
Bringing the total new investment up to 20 million USD.
Right. And if they get that funding and the shareholders accept the offer, they're hoping to get this all done by late summer 2025. So pretty soon.
And if it goes through, the plan is clear. Take Play off the NASDAQ Iceland Stock Exchange.
Delist it. No more public trading, which, as you said, gives management that breathing room, that flexibility to make big changes.
Okay, so this isn't just shuffling ownership. This sounds like a fundamental pivot, a whole new direction for the airline.
It really is. The analysis calls it revolutionary, and that doesn't feel like an exaggeration. The core of the new plan, abandoning the transatlantic hub model completely.
Wow. So the model they launched with, the one that echoed WOW Air, they're dropping it.
Gone. And that has immediate, very direct consequences for key operations.
Meaning?
They're stopping all flights to the United States, full stop.
All of them.
And
Wow.
starting this winter season. So September, October 2025 timeframe, those routes you might handle, Baltimore BWI, Boston BOS, New York Stewart SWF, they're being discontinued.
Okay, that's huge news for the ground crews and everyone connected to those flights. A complete retreat from North America, is that the phrase?
That's what the reports call it, because simply it wasn't making money for them.
So if they're not flying to the U.S., what are they going to do with those planes? They have 10 A320neos, right? Modern
Right.
aircraft.
Yeah, good modern fleet. And the plan is twofold now, a dual focus.
Okay, what's the first part?
First, a smaller, dedicated Icelandic operation. 4 of those 10 aircraft will keep the Play branding.
Flying from Kyiv.
Yes, flying
Yeah.
from Kyiv. But focused specifically on the Icelandic leisure market, think sun destinations in Europe, and also VFR traffic.
VFR, visiting friends and relatives.
Exactly. The report specifically mentioned routes serving VFR traffic to places like Lithuania and Poland as being key for this smaller Iceland-based operation.
Interesting. So a much more niche focus from Iceland. What's the second part with the other 6 planes?
That's where the majority of the fleet goes,
Yeah.
into the ACMI business.
ACMI, aircraft, crew, maintenance, insurance. So basically leasing planes with crew and support to other airlines.
Precisely. They provide the whole package, the plane, the pilots, the cabin crew, the maintenance, the insurance, to another airline that needs extra capacity, maybe short-term or for a longer project.
Okay, so 4 planes doing leisure VFR from Iceland, 6 doing ACMI leasing globally. How do they make that work financially?
Well, this is the crucial part. The plan hinges on keeping costs at an absolute minimum.
Which means?
Relocation. The majority of the operations, especially for that bigger ACMI part of the business, is planned to move away from Iceland.
Move where?
To Malta and Lithuania. That's where the operational base, the cost center, will largely be situated.
Wow, that is a massive shift away from Iceland.
It is, and legally a key part of this is their plan to surrender their Icelandic air operator certificate, the AOC.
So they won't be an Icelandic airline in that regulatory sense anymore.
Not primarily. The operations are intended to run under a Maltese AOC. Their subsidiary, Play Europe, actually got that Maltese AOC back in March this year.
So that piece was already falling into place.
Seems like it. It enables this shift to a lower-cost operational base.
But hang on, what about those 4 planes still flying play routes from KF? How does that work if the main AOC is Maltese?
This is a fascinating detail from the analysis. Those 4 planes serving the Icelandic market, they will actually be leased internally.
Leased from where?
From the Malta-based sister company that holds Maltese AOC and manages the main fleet.
So the play we see at KF, it's kind of like a brand front, leasing planes from its own Maltese arm.
Essentially, yeah. It could function somewhat like a marketing and sales operation here in Iceland, while the actual operational control, the cost structure, the asset management is centered in Malta. Almost like a virtual airline model for the Iceland part.
Okay, let's really focus this now. For you listening, working at KF, maybe doing the ground handling for play, pushing back those red planes, what does all this actually mean day to day?
Well, first off, you're definitely going to see changes in the flights you handle.
Fewer flights overall? Or just different ones?
The mix will change dramatically.
Yeah.
With all the U.S. roads gone, that's a big chunk of activity disappearing.
Right. No more BWI, BOS, SWF flights to turn around.
Instead, you should expect to see more focus on those European leisure spots. And those specific VFR routes we talked about, Lithuania, Poland, it'll be a different pattern, different destinations on the boards.
Okay, what about the people? The play crews you work alongside, there's talk of moving operations, potential cost cuts. What about the Icelandic staff?
This is obviously a huge point of concern. The proposal, and the CEO has stated this publicly, commits to keeping Icelandic crew members for those 4 aircraft that will remain focused on the Icelandic routes.
And their contracts. Pay.
The commitment stated is to stick to the existing Icelandic collective bargaining agreements for those crews. Apparently, new long-term agreements with the union, IFF, were approved recently.
So the message is, for the part of the airline still based here, serving Iceland, it's supposed to be the same Icelandic crews, same wages, same conditions.
That's the promise.
If
The messaging has been very specific. Same red aircraft, same configuration, same Icelandic crew, same wages, same great service for that specific Iceland-focused operation.
But There's always a but, isn't there?
Well, the challenge is going to be balancing that promise for the four-plane Iceland operation with the overwhelming need for the entire company to cut costs drastically.
Because the main cost-saving strategy involves moving the majority of the operation, the ACMI part, to lower-cost bases in Malta and Lithuania.
Exactly. So you have this tension, maintaining Icelandic standards here, while the core financial survival plan relies on achieving much lower costs elsewhere. How that plays out long term,
Yeah.
we'll have to see.
It's interesting, too, thinking about who's driving this. Elias Scully Skillison, the vice chairman involved in the bid. He has serious KF roots, doesn't he?
He absolutely does. He co-founded Airport Associates back in 1997.
Wow, so he knows ground handling and KRF operations inside out.
You'd have to assume that deep understanding of the operational realities and costs here is heavily influencing this new strategy, even the decision to relocate the main base for efficiency.
And that ACMI business, those other 6 planes, while we might not see them at KF as much, depending on who leases them and where they fly, that's really the core of the new play, isn't it?
It seems to be where they see the path to more stable revenue, leasing those modern A320neos out, with crew included.
Is that a good market to be in, ACMI?
It can be. Those A320neo family planes are efficient and in demand. The analysis suggested they could potentially lease for somewhere around 400, maybe 460,000 US dollars per aircraft per month.
Okay, multiply that by 6 aircraft. That could be a solid revenue stream if they find customers.
If they find reliable customers and manage the operation efficiently, yes. But it's also a competitive market. They're new to it, facing established players. There's risk there too, like finding clients, ensuring reliability.
And the whole shift. Moving the main AOC, the operational base, away from Iceland, even while keeping a smaller presence here. That feels like a big deal for Iceland's aviation sector overall.
It does. Longer-term implications, maybe.
Yeah.
But right now, the absolute focus seems to be on saving the company itself, making it financially viable, even if it means this quite radical restructuring.
So looking ahead, the goal is clear. Profitability.
Yep, through cutting costs via the Malta-Lithuania move and building up that ACMI income stream.
Using those valuable A320neo assets.
Exactly, but the risks are still very real. It's a complex plan. There's what they call execution risk, just making all these moving parts work together smoothly.
Changing AOCs, managing split operations, entering a new market. It's a lot to juggle.
Definitely. And that potential tension we mentioned between the Icelandic standard operation here and the minimum cost focus elsewhere.
Yeah.
That could be a tricky balancing act down the line.
And stepping back, what does this say about flying from Iceland? Play leaving the transatlantic game after WOW Air. It really hammers home how hard that low-cost hub model is from here.
It does. It basically leaves Icelandair as the main player doing that kind of transatlantic connection. This reinforces just how difficult that specific niche is for a low-cost entrant.
So if this all works out, the Play Airlines that comes out the other side won't really be the airline that started in 2021 with those big transatlantic ambitions.
Not at all. It'll be a very different beast, much more focused on the B2B ACMI market and serving a smaller, specific leisure and VFR niche from Iceland.
Okay, so let's sum this up. The headlines might say takeover, but the real story here is a massive transformation.
A complete strategic pivot. Play is stepping away from the transatlantic low-cost dream that proved so tough.
Towards a model based on relocating the main operational base for cost efficiency, focusing heavily on leasing out most of their planes via ACMI.
And keeping just a smaller, dedicated operation serving the Icelandic leisure and VFR market, flying under the Play brand, but operationally tied to the Maltese structure.
And crucially, the North American routes are ending this autumn. The operational center is moving to Malta and Lithuania.
That's the plan. Even the flights you do still see at KVAF will be, in essence, operated under that new structure.
So for you working at CAFE dealing with Play, expect changes to the flight schedules, fewer U.S. flights, more European ones. Understand this new split structure, even if the planes look the same.
And keep an eye on how those commitments to the Icelandic crews for the remaining KVAF operation hold up against the company's overall drive to cut costs.
It really makes you think, doesn't it, about what kind of airline can actually thrive operating from Iceland beyond the established flag carrier model.
What does it take to navigate this unique, often challenging market? It's a real-time story of adaptation, big risks, and a search for profitability at the right altitude.
We really hope breaking this down helps you feel more informed about everything going on with Play Airlines right now.
This has been Turbulence and Takeoff's The Play Story.
I'm Anal.
And I'm Lisa.